Hey everyone, just checking in with you. It's been quite some time since I've done a video just speaking directly to you about my thoughts on macro and markets. I will be discussing some issues that we have going on just to keep you updated. The importance of this channel is independence and to search for the truth beyond the headlines. Very important. Data can be manipulated. It can be construed in many different ways. There's many different schools of economics. There's Austrian, like we talk about quite often. There's Keynesian, which tends to be more mainstream, classical view. So there's different ways of interpreting the data as well as how it's collected. And that's very important. If they change the way it's analyzed and calculated, the data looks different compared to other time periods. So I want to discuss some current data that we're seeing. GDP, we'll start with that. There was a 4.9% growth for Q3. And if you look past the headlines, past that big number, we look into the tables, we see that government spending was up about 42.8% in Q3 versus Q2. That's significant. And 22% was federal spending. Inventories are also up 65.5%. And inventories can be a leading indicator of what's to come. And we see rising inventories. That isn't a positive. I don't want to say it's particularly a negative, but it is not a good thing that's holding up that GDP number. To me, in my opinion, does not demonstrate robust growth, as many have been saying. It actually is very concerning when you see government spending. The deficit's about 6.3% of the GDP, and government spending comprises about 1/5 of GDP. So when you remove that bloating from the government spending, and it does crowd out the private sector, it seems that the private sector is very much in a recession territory in many pockets. I'm not going to say it's widespread, but there's definitely many pockets. And we've spoken about on this podcast, housing being in a stagflation. Definitely in a recession. It's in a standstill. Home prices are still elevated and home sales are down, and that's on a national scale. And so there's a lot of issues there. The Fed has locked people into their homes with low rates, and so people aren't selling. So the lower demand is coupled with the lower supply, and we'll see what happens as we go into 2024. As we know, unemployment numbers usually tend to tick up during a recession, a more widespread recession, or even after the recession in a recovery, as we've seen recently with some of these recessions and bear markets, that we have jobless recoveries. And that occurred recently in the 2008. We saw that was a very prolonged mean duration of unemployment after the actual recession. So that lasted quite some time, but that had to do with data collection as well. And that's for another day. We can discuss that. I've actually written an article about that on my website, rosannapresio.com, if you're interested. Back to the GDP. Government spending is comprising a lot of that growth and inventories. And as I said before, the deficit percentage of GDP is 6.3%. So we have government spending significant. Now, inflation is still here. We're still in an inflationary period, even though many like to say that the inflation war is over. In my opinion, it is not. We're starting to see some numbers tick up. It has been decelerating. However, it's very sticky in many areas. So inflation is not over. So it's very different from historical periods where we had inflation, that now the government has increased their spending instead of being more prudent and decreasing those expenditures. Even if we did tax heavily the wealthier people, the tax receipts could not cover this massive amount of debt. It's 33.7 trillion plus about $1 trillion in expenses yearly. And it's estimated in 10 years to be about $50 trillion. I mean, estimates are anywhere in the 40s, and now I see 50 today. We know it's increasing, And we're projecting the debt, let's see, the deficit is in 2023 about 1.7 trillion. And they're actually projecting, this is right from the government directly, saying about 1.6 trillion in the first half of 2024. So that's pretty significant. So we have that going on. Government should be reducing spending in this type of time period. And it, to me, this is just unsustainable. It's just a ticking time bomb. It just seems with this debt that we have as a debt crisis. And it's definitely a future burden on the people. And I think everyone needs to be aware of that when we have government spending, it is a future burden on the people. So, and it also adds to inflation. So we're wondering how much longer can this go on? It's a very slow process, and it seems to just be a slow going into this recession that's very much talked about. But it seems like next year is most likely more widespread recession. We'll have to wait and see. I guess we'll know once we're in it, or maybe afterwards, usually in hindsight. I have to question if they even have any intention of paying back this debt. So it's just a lot of questions are raised. I think you just all need to be aware of what's going on. That's the most important thing, is to just question the data and know there's a story behind that. You know, we've had purchasing power decrease since the 1950s, and it's been a massive monetary debasement play since 2009. Since GFC, we've had monetary debasement significantly, and it accelerated during COVID. So our money supply, even though it's shrinking at a really fast rate, we were hit like almost close to 9 trillion in the peak. We've come down about 1.1 trillion from that. We're in the 7.8 trillion range now. Pre-COVID, we're about 4 to 5 trillion. So we still have a lot of money in the system. Maybe that's what's contributing to the liquidity that's in the markets right now. Markets are running, they're green right now. We're in about 4,300 range SPX. So we're seeing a lot of growth, technology stocks running up, AI. I do believe AI is the future long-term. Multiples are extended, especially when we have margins compressed, lower growth, technology, innovation, automation. Those are all keys to growth in the future. Stay positive, remain liquid, and subscribe to the channel to stay ahead of all the latest. Thanks.